All right, so before anything else happens, I just want to establish what this actually is. No sponsorships, no affiliate cuts, nothing like that. I don't run that kind of channel. What I do run is a pretty obsessive testing process around crypto infrastructure. And for the last several months specifically, that's meant going deep on AI-driven trading systems, actually stress testing them, running them into bad conditions on purpose, trying to figure out what holds up versus what just looks good in a promo clip. And today, I'm walking through on one of these platforms with actual capital on the line, and then getting into some process stuff that I genuinely think is hard to find explained well anywhere. So the platform's loaded up right now. I tap into Launch Bot here. Okay, that's open. First field is trading pair, and the reason the asset list is this long is because the system is running simultaneously across different exchanges, so the available coins naturally reflect that whole coverage footprint. I choose ETH. Strong cross-exchange volume, decent spread variance, makes for a clean environment for what I'm trying to show. So here I switch to live mode, and right below that, the wallet address field appears. Good. Next is capital allocation. It's the session budget, nothing tricky about it. And right underneath is risk level. And I actually want to spend a second on this. This setting controls execution selectivity, specifically how much price uncertainty the algorithm is willing to accept before it decides to pass on a trade. Low setting means it's only pulling the trigger on the cleanest, highest confidence setups. High setting means it starts operating in messier spread conditions. Okay, and then the last thing is arbitrage strategy, which is basically the operational framework the AI locks, the logic it's applying when it's scanning exchanges looking for price gaps worth acting on. All right, that all looks right. Moving next. Deposit screen is up now. Got a couple assets available, and I can set this with any asset I want, just whatever makes the most practical sense for me. Don't need to convert anything on my end. The platform takes care of that internally before.
Done. So now I press confirm and okay, it started. The system is showing everything in real time, spread data, trades, win rate, the chart running underneath all of it. Okay, session's complete, and this summary screen is the full record. How long the session ran, total trade count, which strategy was active, win rate, and then the net figure at the bottom with the platform's fee already pulled out. That bottom number is what the whole session was building toward. Now I press withdraw, and now it processes transferring. It takes a few minutes to settle fully, so I want to use this time to get into something I think matters more than the demo itself. So, I want to explain what the mechanism is here, because most people watch something like this and just take the output at face value, without ever asking whether the underlying logic is even coherent, and that question is worth asking. Every major token is trading across multiple exchanges at the same time.
And because those exchanges are all running independently from each other, the price of the same asset is almost never perfectly identical across all of them at any given moment. There's always some small discrepancy floating somewhere in there. That discrepancy is theoretically a profit window, but only for whoever can get to it before the market closes it on its own. And the self-correction is brutal in terms of speed, fractions of a second. By the time a person notices the gap and physically tries to act on it, it's already gone. That's the exact problem this kind of technology is built to solve. Not identifying opportunities, that part's actually the easier side of it. The hard part is executing on both legs of the trade fast enough that the window is still open. The algorithm doesn't hesitate, doesn't second guess. The moment the criteria are met, both sides go simultaneously. And running that logic across exchanges in parallel is what converts a theoretical edge into something that actually shows up as a real number at the end. Okay, so I've been testing this system with intentionally varied configurations and capital figures every time, and want to be specific about that. The conditions weren't being optimized to produce good-looking results. They were being deliberately rotated to see whether results would break. They haven't. Results have cleared cleanly across the board. Numbers have tracked correctly through the full range of testing. Nothing has come up that shifted the read on what this system actually is. And that's the output of a real stress testing process, not a favorable session that happened to get recorded. So if running through a similar process sounds right, link is in the description and it's pinned in the comments. Thanks for your time.